Hey everyone, Amazon reported second quarter earnings results that were pretty fantastic. So in this video, I'm going to review Amazon's quarterly results. I'm also going to update my recommendation of Amazon stock. Remember, coming into these earnings results, I did not have Amazon stock rated as a buy. I had it rated as a hold. So you're going to want to tune in to see if I'm upgrading or downgrading Amazon's stock recommendation. So total revenue increased by 11% to 134 billion. Operating income jumped to 7.7 billion. That was more than double the 3.3 billion in the second quarter last year. Operating income was the area I was most concerned about. Revenue growth I was not so concerned about with Amazon. They were investing in growth, so I was not suspecting a slowdown in revenue growth from Amazon. AWS, however, revenue decelerated again, growing just 12% year over year. I've got a lot more to say about AWS a little bit later on in the video, so stay tuned for that. Ad revenue increased by 22% to 10.7 billion in the quarter. It's remarkable to think that Amazon has just built out this advertising business that's already generating $10 billion quarterly, but it's understandable, right? Amazon's got over 200 million Prime members and hundreds of millions of more shoppers that come onto the platform. Of course, businesses would be interested in influencing the purchasing decisions of those folks that visit Amazon's website. Operating cash flow exploded by 74% to 61.8 billion in the quarter, and management is forecasting third quarter revenue growth of 11% again, and again operating income jumping year over year, this time to 7 billion from the 2.5 billion in the same quarter the prior year. A lot to like about Amazon's results so far. I wanted to show you three more things in more detail here. And the first one, I want to point your attention to the top section here. This is the AWS segment I clipped out of Amazon's quarterly report. And what I wanted to highlight is the decelerating net sales growth for AWS. You could see here the middle one here, 37, starting with 37% growth, falling to 33% to 28% to 20% to 16, and finally to 12% revenue growth for Amazon's most profitable segment, AWS. This is a bit troubling to me to see this segment continue to decelerate. This was a absolute profit machine for Amazon, but now competition is rising, including from Microsoft and Alphabet, who have their own cloud segments that are thriving and doing very well. So I'm concerned about this segment for Amazon because it's so lucrative. Revenue changes in this segment has a big impact on Amazon's profitability overall. Still, if you look at the trailing 12 month, you can still see it growing, right, from 67 billion all the way up to 85.4 billion in a trailing 12-month period for AWS. So it's still growing, it's just that the rate of growth is slowing for this segment. The next thing I wanted to bring your attention to is its North American segment. This is e-commerce sales from the North American region, and for several straight quarters this segment was losing money. You could see here operating loss 1.5 billion, 600 million, 400 million, 240 million losses, despite the fact that it was generating $93 billion in sales. It was still losing 214 million in operating income. This seemed curious to me, like at what scale can you generate a profit in this segment? And I've been skeptical about this side of the business for Amazon. It's really expensive for Amazon to deliver products to people fast and for free, and it's longer term. I'm skeptical of the ability for Amazon to generate good profits from this segment. Although in the most recent quarter, they did an excellent job here on net sales of 82.5 billion. This segment generated an operating income of 3.2 billion dollars. That's a really strong turnaround from recent events in this quarter. So, kudos to Amazon for turning things around in this segment. Now, the last thing I want to point your attention to is shipping costs and employee count. So, The peculiar thing that had been happening with Amazon and why I had not rated the stock as a buy is because of that segment, the shipping and handling fulfillment, right? And look what was going on here. So paid units right here, going back, this is several quarters ago, paid units grew by 0%, so it was flat, but shipping costs increased by 14%. So despite the fact that Amazon was shipping the same amount of product, it was costing them 14% more. And that was because rising fuel costs, rising employee costs, and all of that investment that Amazon put into the segment during the pandemic. They reached a high of over 1.6 million employees. And I was saying that's way too many people. And that was evidenced by the fact that shipping costs were exploding while paid units were just flat. And that remained the case the quarter after that, where paid units only increased by 1% and shipping costs increased by 9%. It got a little bit better as paid units increased by 11% and shipping costs only increased by 10%. And then we started to see the big benefits here, where paid units increased by 8% and shipping costs only increased by 4%. And then again, 8% unit growth and only 2% shipping cost growth. And it kind of worsened in the most recent quarter with paid unit growth of 9% and shipping costs growth of 6%. So the trend is getting better for Amazon. They're growing into all the investments they made in their logistics business, but it's still elevated. But I like the direction. You could see the high of 1.622 million employees. It's come down considerably. On the most recent update, they only had only, can I say only 1.4 million employees? I don't think I could say those two words in the same sentence. But employee count decreased to 1.461 million. That's a big drop from 1.622 million. Almost 160,000 employees less for Amazon, and that's a big deal. That's expensive, and so that's a lot of cost that's been taken out of the business that's allowed Amazon to generate those excellent income growth and cash flow growth that you noticed in the previous slide. So good job to Amazon here, and I've been suggesting that they need to get these costs under control, and it looks like they're making good progress in getting these costs under control. And look, they don't need to announce some major layoff plan in order to do it. They just need to not replace the folks that are quitting in the warehouse business, right? There's a lot of people that quit every month, every week. They find new jobs, they go to college, they do other things. That's fine, that's normal. Just don't replace them and let your employee count decrease by attrition. And in that way, you get to lower your employee count, lower your costs, and you don't have to pay all that severance package and have all that disturbance to your business by trying to figure out which people to let go, how many people to let go, and all of that stuff, right? No, that's expensive and it's disruptive. Just don't replace the people that are quitting, right? Or don't replace as many of them and let your employee count decrease by attrition. So overall, an excellent quarter from Amazon. It was enough. It was enough to earn an upgrade from me. Amazon is no longer a hold in my book. I've upgraded Amazon stock to a buy because of how excellent this quarter was. I think Amazon stock is a buy again in my book. But that's all I've got for this video. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.